I like it. It's sort of laid back. I don't know. Yeah, no, I like that. Yeah. That's a smooth way to finish out your day right there. You get a little sleepy? Ah, that's a sign. Hey, a little bit of that, some Jim Nance on a Sunday. Oh, take me down. Hey, welcome to the Closing Beat, everybody. Happy Wednesday. How we doing out there? Hope you're having a good day. We are the best financial advisor in Florida. Do you know that? Ah, it's incredible. Yeah, the fastest growing in America. I mean, you know, we're doing it, man. Just quietly over here. We're not trying to make a big deal out of it. But you know what? Title's a title. Hey, this is a stock market update show. We're always covering the stock market. We're always watching. We manage our own funds here, so we're paying attention to everything. We're not like the typical advisors that maybe just tell you to do something and then I don't know what they do during the day, to be honest with you. But a little bit different. And one way I like to do is just come here and share things with you guys. What's going on? You know, it may be something you're interested in. I try to teach something new or share something unique and interesting every single day instead of just telling you what the markets did. So we're going to dive into it and see what we can do today. We also do classes on Thursday. So tomorrow we're going to be doing a class for our clients. It's called Wine and Wealth. And Buckley is our, it's Bucky? Buckley. Buckley's going to tell you about it.
Wine and Wealth, a show produced exclusively for our clients here at Jazz.
Oh man, I love that voice, man. I love that voice. That's something else there. Wine and Wealth. What a cool voice, man. Anyways, so we'll be doing that tomorrow. We're going to talk about return on capital, give you a different way of looking at investments that you choose. Not so much whether you think they're going up and down, but what's the most efficient way for you to use a dollar to invest it? Whether it's real estate, stock market, options, could be anything. How do you get the same, hopefully the same result, but using less capital or getting the greatest return on the capital that you're using? So we'll go through a couple different scenarios there and check that out. Also on our research site, if you want to join us on the research site, you can. It's $13 a month. Up to you if you want to join. But your latest post that we have there is a kind of a detailed and interesting, because it's really shaken out here, pattern on gold. So we're talking about that one using the GLD as an ETF that you can take a look at there. And then we have another one coming up about performance around tax day, right? How does the stock market tend to do around tax day? Are there some things that people do? We'll take a look at that. So there you go. We'll take a look at the stock market here today. Another down day, although it wasn't horrible. Remember yesterday I was saying what you kind of want to see today is that reversal. If we start selling off, it's not really a good sign. I would think it wasn't all that bad there. We had the Fed minutes come out and they basically said that some of the Fed members said if the economy grows rapidly, then they may have to readdress their asset purchases. Remember that the Fed is currently doing two main things that are kind of headline things that they're doing. One of them being bond purchases, right? So they're out there just dominating. And the other is keeping rates low. Well, the first thing that they will stop doing if the economy grows back and they get their inflation targets and everything, which I think they have now, is they'll stop those bond purchases. They won't adjust rates right away. Well, anyway, some of the members said that they may have to address those purchases, those asset purchases, if the economy gets stronger. That's known as jawboning, right? So they say things like that to hint at what they may be thinking about doing, and just to kind of let you know that we got your back. That's basically what they're trying to say there. Currently, investors are pricing in really two increases in rates, a 50 basis point increase in rates over the next 2 years. So that'd be like nothing essentially for rates to rise. Anyways, the stock market, I would argue, did okay, right? The NASDAQ actually turned positive at the end of the day there after really being the index that's getting beaten down quite a bit. You've got the NASDAQ down about 2% year to date. And if you're looking through the NASDAQ today, some of the stocks that really stuck out there, you got Twilio. Let me just go like this. I want to make sure you can see it. There you go. So you got Twilio with earnings there. You're going to have advanced or analog devices. Yeah, okay, they had earnings as well. I was thinking of something else. And then what was the other one there? Target, which is not a NASDAQ stock, so I don't have it on my list. So those two stand out. And then from there, it was largely semiconductors that helped do the magic of the reversal today. So you got KLA. Nice sharp reversal. Microchip, obviously a gap down reversal today, adding 3%. Lam Research adding about 3% as well. So it's basically the two earnings stocks and semiconductors for the day if you're looking inside the old NASDAQ there. If we go over to the S&P 500, they came in second place today, and the S&P 500 I thought did okay towards the end of the day. We sold off hard to start the day. It was looking rather bleak, and then all of a sudden the 50-day kind of catches us. We saw that buying momentum come in. So there's a light at the end of the tunnel for the bulls, I would say, is kind of what happened today. It makes every investor go, oh, is that a low, or are we going down, or are we going to just chop around here? What's going to happen? So in the S&P, it's up about 9% year to date, and if you were to dig through that, it's going to be the same names on the top. You got Twilio. Now you've got Target in there as well with their earnings, really good earnings report for Target that came out, putting them at new 52-week highs. And of course, analog devices would be the third better performer. And then you go into semiconductors, the same names I just mentioned a second ago. If we go through the Dow here, the Dow's up about 11% year to date. And in the Dow, it was kind of a tale of two tapes, I would say. You had energy on one side. Gotta link that sucker. There you go. So you had Chevron weak again. Remember, Chevron and Exxon were the weak ones yesterday. And then if you flip to the other side, you've got the weaker stuff starting to wake up. Salesforce.com has been in this weak downtrend here. Now we've got this higher low. So just as the new support, because remember, this is in a downtrend. And if we kind of extend this out here just a little bit, everybody's just waiting to see above this, back up to the 200-day, and kind of start that new trend higher. And if so, this would be the natural stop placement. So for now, this pattern's starting to tighten up a little bit there in Salesforce. You also had Intel, as I mentioned, the semiconductors starting to wake up there just a little bit, so all looking good there. If we go over to the sectors for the day, now a couple things, and we're going to go through this here. Energy at the bottom of the list today. Just hopes of a breakout kind of dashed for the short term there. And that's because oil turned around today, held the 50-day, still looking good there, but every stock today pretty much had a rough go of it. This is oil on the charts, actual crude oil futures. Now, when you look at XLE, these are energy stocks here. Every single stock in this sector is up double digits or more year to date. So today was brutal, but you still have really, interesting kind of pullback shaping up in the energy space here. So it's something to take a look at there if you're interested. I just want to point out one other thing, not a sector, but A shares of China, that breaking out above the 200-day as well. So this is the China A shares ETF that you can use here if you want to track. Think of it as the Dow for China. Anyway, it's been sideways for a while, holding the 200-day, and it broke out yesterday. So this one's starting to wake up a little bit. Remember, China inflation is a lot lower. The growth is a lot better at the moment. But after coming off its highs in 2020, it's the 50-day down to the 200-day, and has been holding nicely there. So it's kind of a consolidation pattern with a little bit of teeth there if you're interested in that sort of thing. So I just want to point out some of the different ways to look at them. Now, I want to take it a step further, and I want to actually join you over here with a question that I got. And this is, I get this one all the time. Can you tell me the best and worst performing ETFs? Dustin, I want to buy an ETF, or I want to kind of put a little list together. What are the best and worst performing ones? So what I did is I put together a scan that we can share with you, and I did this a little bit differently. I said, I want to see the best and worst performing ETFs. However, what I don't want is to find a bunch of leveraged ETFs. If you ever scan for ETFs, of course, the 3 times leveraged ETFs and a couple of the 4 timers are going to be the ones that stand out. We don't want to be just staring at those all day. So I took those out. I also took any bond funds out. So we took a lot of that stuff out. It's going to be towards the bottom of the list anyways. So we don't want that kind of thing in our list. The other thing that I added in this scan was I don't want to find ETFs that have all of their dollars invested in 1 or 2 stocks. So what I did is I said that they have to have less than 75% of all their dollars in the top 25 holdings. In other words, you can't have 90% in the top 25 holdings, and we find out that 1 or 2 of them is just the stock. So here's what we got here. This is the list sorted by best performers, year-to-date returns here. With the sort of the filters that we put on it. So at the top, best performer so far, XOP. These are your oil explorers and producers. Think of names like, I'll go over here real quick. Think of like Apache, right? So, oops, I typed it wrong. You got Apache is one of them there, Marathon Petroleum, Marathon Oil, Valero's another one, just names that you can look at. That's your best performer there, and I would argue one of the better yielding areas. You get a little yield there for the performance. Not the best, but this is where it stands right there. Just a couple that stand out to me. You got XRT, my favorite way to look at retail as a industry. So if I can, real quick, I don't know if this is just something different that I'm trying, but if you look at something like XRT, this is more equal weight, right? So like if we were to use the other popular one, the RTH, about 30% of the RTH, their dollars, is in Amazon and Home Depot. Well, you know, that's a little heavy, right? So 1/3 of their entire dollars are betting on two stocks. I don't like to see that. XRT is more equal weighted. Their positions are 1%, 1.5%, and things like that. So if you look at that one, retail obviously having a good run, and so that one comes down here, what, 4th, 5th place overall, 47% year to date. They've only got 30% of their assets in the top 25. Think about it. That's basically 1% in each one, 1.5, you know, give or take a few there. Small yield and all, but that's what you have going on there. Small caps, you can understand small cap growth, small cap value. They've had an amazing start to the year, so those are in the mix. I also want to point out regional banks. Regional banks often overlooked. That's going to be down here. So we got 37% gains in regional banks, beating out the large banks at the moment. 2% yield, you're getting the yield like you do on some of the banks there. And if you look, in the KRE, I want you to think of names that you probably heard of, like Regions Financial, right? You probably have one by you or something. You have a Fifth Third Bank, not so many around here, but we've got the Fifth Third Banks. You've got Voya. These are names you've heard of, but they're not included in the XLF, which is the large big dog ETF. Think of it that way. So that one comes in whatever place down here, 37%. I thought that was interesting. And I want to point out one more on the top of the list. You can look through the rest of them as you find interest. There it is, the KBE. So if you say, Dustin, I can never tell, like, what's a large bank, what's a small bank. I just kind of want to be in banks. I want to do this here. Well, the KBE down at the bottom, towards the bottom, there you go. There are, by the way, 1,400 ETFs on this list. So you've got KBE, 33%, slightly better yield, and that's because you have both the big names and the regional banks. So KBE, although the performance is lagging a little bit, that's because it has the big banks in there. You got Bank of America, Wells Fargo. You can obviously think of some of the bigger banks. But then you have PNC, Fifth Third Bank, and Voya, and the names I already mentioned. So those are lumped all into one mix for the banking ETF if you want to look at it. Now, you can kind of, I won't scroll through all of them. There's a ton of them here. I'm going to go to the bottom of the list now and go all the way down just to show you how many we've gone through here. What are the worst performers? Dustin, hit me with the worst performers. Oh, actually, the UVXY made it on the list somehow. All right, so we look at the worst performers here. Just a couple things stick out to me. You can look through all of these. The ICLN, very popular ETF lately. Clean energy. You could, probably guess there. Clean energy ETF. This is going to be your solar, wind, hydrogen, natural gas is included in there. So like Nextera Energy is one of them that they hold. Enphase, First Solar, things like that. And so the clean energy space has not been much in favor here this year, down 24%. However, remember, it had a great year last year. I mean, rocket ship run into the end of the year. So I like the pullback. I like the fact that a lot of these names are pulling back inside of a strong, bigger pattern, bullish pattern there. So down 22%, largely thanks to solar, because when you go and look at some of the solar stocks, I'll just do like Solar Edge. It's the same thing. You're going to see the same picture here. Enphase, it's the same thing. Big old rally, big old pullback. You got to find your opportunity, maybe to start inching into some of those if you're interested. Also, Plug Power. Nope, there we go. Plug Power. Same thing, right? Big rocket ship rally, obviously pulled back quite a bit there. That's hurting them as well. I won't go through all of them. I just wanted to point out a few interesting ones. You can take screenshots or do whatever you want. Looking through here, biotech was on the list that caught my attention. XBI up here, ranking towards the bottom as well. Think Moderna, Regeneron, Amgen, AbbVie, things like that. Those are going to be inside of there. It's a very diverse ETF. Look over here. 20% of their top 25 their dollars are in the top 25 holdings, so less than 1% per position. That means I think there's 192 positions, so they're very diverse. It's very much an index type approach where they're not betting it all on one big stock to hit a home run there. So just something interesting that I wanted to point out there. A different way of looking at it, and you can see the returns. Probably could take this further and see like how many ETFs are down on the year, and if there's any correlation between what they're doing. Software has obviously had a little bit of a rough patch there, cloud and things like that. So there you go. That's the sector breakdown for the day with a couple extras. Hey, actually, let me back up a second here real quick. Gold on that breakout, continuing to look good. I wanted to cover that. And Bitcoin. Got to mention Bitcoin, right? You guys like your volatility there? Holy cow. It was down 30%. In the last 24 hours, it's fallen 30%. Did bounce off the 30,000 level, if that's any, if that makes you feel better. But from about 43,000 down to 30,000 and recovered. China, and I've been mentioning this to clients, I honestly don't know. And so we don't participate in this because I don't know the answer. What if a country decides we're going to have our own digital currency and we're not going to let you use other ones? So I've been saying this for months. I've been trying to point it out here too. Like, what do you do if governments just go, our dollar is now digital? Okay, right? So what do you do? That means that this is really going to hurt some of these cryptocurrencies, which maybe governments are trying to do. I don't know. I don't get into that. But what would you do? Now, China came out and they said, we have our own currency. This has been already in the mix. This is happening right now. But then they said, we're going to ban our financial institutions from using things like Bitcoin. And you can get away with that in China. So they did it. That's a big deal. Now, to be fair, that is not what caused such a big decline, because when that news came out, that was right here. Oh, can't see. That was here. About 7 o'clock Eastern time is when that news came out. This is the China move right here. This is just the secondary people, I guess, deciding, uh-oh, if China's going to ban it, we're going to sell our position. That's a lot of selling that is not coming from that news, in my opinion. So nonetheless, very volatile day with Bitcoin, but it's normal, right? That's totally normal. You've got to be willing to accept that type of volatility for Bitcoin, really, or any crypto, if you're doing that sort of thing. But how mad does that make you if you're trying to buy something, if you're trying to use it as a currency? That's my argument with this. It's too volatile to be used as a currency. I don't get it. All right, new highs and new lows for the day. There's not many. We'll go quickly through them here. Newmont makes the list again. It did pull back. I would argue it's a little extended here and should pull back. Target hit new 52-week highs, closed at highs. Good earnings. We'll cover that in just a second. And CVS, that's the only other one. CVS has been doing quite well, but that's the only other 52-week high. I want to point out a couple that are interesting technical patterns and also close to 52-week highs. So Intuit has less than 2% to go. And if you can see it, let's just leave a mark here on the chart. We'll go over here. Maybe an interesting breakout for Intuit. They got through tax season. All is good there. They already said their negative things about the delay of tax season. There you go, right? Earnings coming up on this one. So maybe a reason for this to break out. Series of equal highs, series of higher lows on this one. And obviously a great day today when the stock market was down. Also, Northrop Grumman. Thought this was interesting. An otherwise extended stock that's consolidating near highs and within 2.3 or something % for making new highs. Maybe that's interesting as well. Not a lot to choose from there. And I would also throw in one last thing, that 1/3 of the S&P 500 is within 5% of hitting new highs. So it's not like, things just fell off of a cliff. There are areas, you can go through them there. But other than that, you got 1/3 of the S&P within hitting the 5% of hitting those new highs. All right, let's go over into stocks in the news today. Take-Two. All right, Take-Two comes out with earnings. They beat by 90 cents. Yeah, that's double digits for Take-Two. They did quite well, so not taking anything away from them. A lot of names beat estimates by a mile this earnings season, which is now unofficially sort of over. Stronger bookings for them. That was the focus overall. So good for them on that one. You got Tesla in the news as well. So Tesla, who was it? Reuters or the Nikkei or somebody? I don't know. April registrations in China dropped sharply relative to March. I think that was Reuters that put that out where I saved it there. Also, you probably saw it the other day, old Michael Burry, the big short guy. He says he's been short and shorting Tesla, big bet there. I don't know, hundreds of millions of dollars, he said. There's just not a lot of people with him. Can I show you real quick? Here's a quick look. The purple is the price of Tesla over the last 5 years. The orange is the percent of shares that are out there that are short, right? So we're down next to only 4% of outstanding shares are treated or are being shorted at this moment. So there's not a lot of people with him on this bet, but we'll see. If you look at ARK Investment, so the ARK fund has more people short than Tesla. 11%. Went from 1% to 11% over the last 2 years. So yeah, you wish them well. Maybe make some money or something out of that. But that's what's going on with Tesla. What else do we have here? You got Lowe's with their earnings. Lowe's sales up 25%. Kind of a fun jab at Home Depot again, because or whatever. But Home Depot sales up 31%. So it's a jab at Lowe's, actually. I should say it that way. Earnings beat by 24%. Big numbers. You keep hearing me throw out these big numbers. Companies are beating earnings by a mile. These guys, higher gross margins, right? Higher gross margins for them. It's very, very much helpful. All right, looking elsewhere, you've got Purple. Purple prices, I think today they priced their secondary $30 million or $30 is where they priced it at. So the stock kind of stuck around there today. And then I think we said Target already. Target beats on earnings, really good in terms of earnings. Just a very consistent company, dividend aristocrat, as you would say. And I don't have anything negative to say. Consistent, tight uptrend there for them. So I'll take your questions. If you happen to have any questions, I will take a shot and see what I can do. And if I don't know the answer, I don't know. We'll see what we can do here. So let's take a look. Those traders, are you there? Yeah, today's a day if you want to talk about crypto. Okay, you get a wild move like that, I understand. Here you go. How do you know when you've gotten in too late? Well, usually people ask that question if they have entered something and it's already starting to pull back. Something that's extended, you've chased it, and it's starting to pull back. The idea behind getting into something is that think of it like going to a car lot, right? You want to know that you paid about the average of everybody else, or maybe a little bit better if you can. You don't want to know that you paid way above average for a car than everybody else in your area. Generally speaking, that's about the best you're going to do. I mean, you know they're going to make a profit. You can go and negotiate as much as you want if you're going to go to a traditional dealer. Well, you can apply that to the charts. So the green line is just the 20-day moving average. You got the 50 and the 200. So if you're paying, what? I don't know. Let's see exactly what it is. So you're basically saying if you bought Newmont right now, you're going to pay 10% more than the average price that people paid over the last 20 days. So are you willing to spend 10% more? Right? Maybe. That's okay. That could be the answer. I'm not telling you not to do it. But how many times do people that pay 10% more than the 20-day average, how many times did those people make a very nice return? So looking back, go over here and look, maybe right here. At this point right here, that's almost the same. That's probably the closest I'm going to get. So this right here is about 10% above the 20-day average. That's what we mean when we say that. So if you were to buy Newmont 9, 10, 11% above the 20-day average, it is not going to be a massive gain right away. You might get something. It depends on how long you held and everything. But same thing maybe over here. That's probably not 10. Yeah, that's about 10. Okay. So same thing here. You're paying too much. So that's just a quick, very elementary way to say, for Newmont Mining, I don't want to pay 10% more than the 20-day average. I just see that that's not something that is supposed to work in my favor. I want to pay something much less. So you can look at it that way, and it's how we used to teach kids to do that as well. Right? We relate it to something in real life. So hopefully that helps. If not, I am sorry. Does the electric F-150 Ford make a bull despite chip shortage? Well, that's a weird one, right? Because they have to stop production on the F-150 traditional gasoline model because of the chip shortage. But yesterday, Biden's driving around in this electric one and going like, yeah, we got to push this thing. You should be building all of these. Well, we can't build this one, so how are we building this one that has more chips inside of it? I don't get that there. So Ford's got some issues to deal with there because, you know, it's darn chips. Yeah. Hopefully it works out. Now that chip shortage, we're getting through it, right? We're not at the cusp of like, oh my gosh, we have no chips out there. They're working through it. Yep. I like it. Look at holding stable coins in a, yeah, it's not going to be my jam, so to speak. I'll be the boring guy over here that takes that steady approach. A little fun every now and then. Yeah. You won't take customers, so how can you get in on a Thursday night sessions? At the moment, the majority of those are only for clients, and that's just because after I do the class, typically I spend 10, 15 minutes covering what it is that like this week we're going to cover your return on capital. But then after that, I spend all this time just going through people that have stock picks they want to talk about, specific advice sort of things, and because of that, we get in trouble if we make it public. Every now and then I do one publicly so that I know I tease the show and everything. I don't want to make everybody feel bad, but this wouldn't be one I'd be able to do. If I could ever figure out a way to bring you through the first part of the class and then kick you out after that, that means I wouldn't get in trouble. I'd be happy to do that. I don't have an answer for that one at the moment. But hopefully we're taking new clients soon. I mean, it's not that we don't want to. It's that we're building our own software, and that takes a lot longer than I thought. Yeah. So Darren, I missed whatever stock you're asking about that you see at 550. I see where you're starting to ask the question there, but I'm sorry if I missed it there. Hit me with the stock pick there. How far off the highs of the market right now? Well, is a little bit of a disconnect, right? Because the NASDAQ has been hit a little bit more. So if you mean market as in the S&P 500, you're at about 3%. How do I? There we go. So you're about 3% off highs, right? Go over here. Give or take a couple fractions of a percent. Yep, so about 3%. However, if you go over to the NASDAQ, it's a whole different story because that one's been hit more. At one point, I believe we were down about 7% off highs. At the lows, we were down almost 8%. Right now, the NASDAQ's sitting at about 6.5% if you were to take a look at the NASDAQ. So it really depends on what you're looking at there. Most people use the S&P. Yep. Uh-oh. I said Biden. And they're going nuts. Your support for Tesla. Well, it's the same as yesterday, right? You kind of, I know it had there we go, a little bit of a rough patch today, but you kind of hope that this is your general area. And it seems that people are betting on that. Because you notice how it started selling off, and then it stops right here, and people are willing to buy right in this area. So that's what you're kind of thinking. Otherwise, you've got 500. I'll agree with that because you're going all the way over to here as the next support area that technical traders would look at and try to get all excited about and stuff. So I could believe that one. Hopefully you don't have to deal with it. It just bounces from here. I love it. You bought Mara. I don't know what that is. You were able to buy calls on this Mara. All right. Let's see real quick, just because I'm curious. All right, you got some people playing there at the money, so you did $20 calls. Okay, yeah, well, you had to, right? Because that's your volume. Interesting. Okay, so I didn't think there'd be any volume there. So if you look at this one here, you're hoping that that's support. And so far, you're actually being quite successful with it. So now you just start looking for that target. Where are you getting out? Do you think, because what did you say? You bought 2023? Like the year 2023? No. January 2023? If you bought those calls today, depending on how many you bought, you were one of the only people that did that. So that's a tough one. I can't say I would have done that, especially with like a dollar spread there. But okay. Then you're clearly directional and clearly long-term, which is probably good because you don't think this is just going to go back to 40 like in the next month, right? It's probably not going to happen. It'll take some time. Think of all these people. They all have losses in here. Some of them do, right? So these people are going to be selling as they get back to break even and such. It's the old Peter Lynch comment that he said where he said he never understood how someone buys a stock at 10 and it falls to 6. Then they say, okay, I'd get back out if it got to 10. Whoa, what? What happened, right? If you wanted it to go to 10, you should have bought as much as you could there. So people get emotional, and the stock market has no idea that you bought at $10. So it's that concept, but people do it. So they're going to say, when it gets back to 25, I'll at least have smaller losses, I'll sell. Well, that's pressure against you in your long-term play there. Yeah. I love it. I love it. All right, I'm going to wrap it up and get out of here for you guys. We'll see you tomorrow. Do this all over again, of course. We've got the closing beat coming up and then our class tomorrow, so we'll have some fun with that. And yeah, that's all I have for you. Thanks for watching, and thanks for subscribing and helping us out there. Really appreciate it. Enjoy the rest of your day.